Hello and welcome to Scrolling with Ceazor. Today is January 12th, 2026. I have a whole bunch of tweets for you today, but before I get into them, I will preface this with this is not financial advice. Do your own diligence. This is all my own biased opinion about the news that I'm about to share with you. There are two key stories that are kind of floating around the most, and I will get to them and I'll kind of highlight them. But there is a lot of news out there today, so I'm going to get right into it. So, first one we're going to talk about is Dr. DeFi. Dr. DeFi is first on my list. I don't know why, he just happens to be. He says, so Flying Tulip. I have a video on Flying Tulip if you want to know how this thing works. But so Flying Tulip's capital commitment is now oversubscribed. 1.2 billion committed against 1 billion raise cap. Now this is not actually this is kind of like a promissory thing. It's not. No money has exchanged wallets as of yet. This is more like you go here and you say like, hey, listen, I'm willing to participate in this with about this much money. So 1.2 oversubscribed is not really the right word for this as far as I'm concerned. It's more like overcommitted maybe, and then like we'll see what actually goes into the contracts when they are ready. I could be wrong, but I'm pretty sure that's right. Okay, so it is a big deal. $1.2 billion of people willing to. In my opinion, if it's designed properly, the only problem you have is smart contract risk, because it's like a lossless commitment. You can put $10,000 in there and you're guaranteed to get back your $10,000 if that's what you want to do. So it's kind of like a no-brainer in my opinion. Just give it a go. Now there is smart contract risk. There is, Andre risk if that's something you believe in and so forth. But check out Flying Tulip and check out Dr. DeFi if you want. Okay. So currently Flying Tulip is under audit. So with Sherlock. So you can also check that out if you are planning to, if you're an auditor and you want to participate in that. Okay, moving on. So Jordy did come up. He was the first tweet when I first opened to X. So yeah, I think he's just happens to be like maybe 1 or 2 hours before me, and he's hard at work when I'm just waking up and making my coffee. But anyways, so he says, I love yield basis, but the risks are important, and I agree with this completely. Now, I'm biased as crap on yield basis because I hold tokens. I participated in the pre-sale, but I think this information is very important to share. Okay, so he says it's currently generating $460,000 in monthly fees. When we look at the math, price to fees is approximately 6.7x, and you compare it to other protocols like Pendle, which is 22x, so price per earnings. And they've already distributed a whole bunch of BTC, $1.6 million worth of BTC to people. Moving down, there is this part here where he says the real test comes in Q1 2026. The 6-month investor cliff is approaching. The early backers are sitting at a 6x to 13x gains with only 12% of the supply currently circulating. The protocol is incredible, but dilution is coming. So he's right. I haven't sold any of my tokens unless you consider the tokens that are currently sold that are inside my liquidity pool. I didn't, when I take part in pre-sales, I don't think of them as like something that I want to flip. I try not to be a flipper. I bought this because I researched the product. I believe in the design, and I think it's a worthy experiment for our ecosystem. And I know that like the devs are solid and dependable, and I know that there would be a fee switch and that it would generate fees. So I look at it like that. Like I might want to recuperate my initial investment if the price pumps outside the top of my concentrated liquidity position, then I will have recuperated my loss, or my not call them losses, my initial capital. However, my initial capital, the amount I put in, was something I was willing to get zero back. So this is the way I work, but there are a lot of people who don't work like that. They put in a lot more than they're willing to get zero back, and they need to recuperate that. So he is right. Like, some of these investors are going to sell, and maybe some of them are already selling, right? So I don't know. It's up to you, but like it's important to consider this, especially if right now you're thinking about buying into this position. So think about that. Do some research. Check out this guy's tweet, and make sure you understand that, like, inflation might come. The yield basis might turn on. Like, there might be a community vote to turn on yield basis incentives for farmers, and then that, or bribes for liquidity pools, and which has already happened in the past. So you have to kind of think about this kind of stuff when you're thinking about actually buying into a liquidity position or buying into a token. So you can check that out. Moving on. Llama on the brink again, Millie. So again, I think this is one of those guys that happened to just be on active, a few hours before me when I'm making my coffee. But anyways, so he tweets out this, he says, TLDR, create a purpose-built L2 for decentralized stablecoins. So there are a few of these already. Now, I wouldn't call, maybe not, Frax still comes to mind. The new Plasma, what was it called? I can't remember. The new USDT chain. Not Plasma, but the other one. I can't remember what it's called. It'll probably hit me in like 5 minutes when I forget about talking about this. Anyhow, so bake the stablecoin oracle into the sequencer consensus so that there are no external dependencies. So this is actually a pretty clever idea. Most oracles are run by like Chainlink, which is an external dependency, or liquidity pools, which happen to be like on the chain, or on other chains, right? And so the oracle tends to kind of run from a third party. But he's saying let's perhaps consider putting it right into the sequencer, into the chain itself, right? Offer an entire DeFi ecosystem that revolves around the stablecoin on the L2. So paired, all the tokens paired with this stablecoin. You can borrow versus the stablecoin. The stablecoin is like maybe rewards and stuff. And then redirect some of the economic activity to the stablecoin as yield for stakers. And then use the staked version of the stablecoin for governance as well. So he's saying that we don't need a chain to have a token if they use a stablecoin instead. And then the stablecoin, so because like a lot of people are missing that, they don't want the volatility of a volatile asset, so they don't want to participate in governance because of that. But if you were asked to stake stablecoins, get a yield on those stablecoins, and then you could participate in governance or delegate your governance to some individual, I think a lot of people would like to do this. So I think this is a pretty clever idea by Millie. Whether it's going to happen or not, he's not saying this is something he's built. This is him just throwing ideas onto the table for anybody who wants to take it away. Okay, so here we have Rec Diomedes. He says, if ETH was a stock, it would be number 30 by market cap worldwide, right after Louis Vuitton and Home Depot. Call me idealistic, but I personally think it's 50x more valuable than either of those. I agree with him. Like, especially Louis Vuitton. I think Louis Vuitton, although it is a successful business, and my wife isn't keen on them, I think it's a complete waste of money. Like, they are quality, valuable products. They produce quality products. I'm not saying they produce garbage, but the price to quality is way out there. Like, it's just way too much. Like, you can get a proper made hard leather bag from some independent, leather worker that's just as good as anything Louis Vuitton has made, but it's 1/10 the price or something like that. And they're not, and that independent comp guy is not paying a whole bunch of marketing costs. So when you buy a Louis Vuitton, you're getting huge markups on your product, and you're paying for massive amounts of marketing, right? Which is, in my opinion, you're wasting your money. Like, do you need marketing? Now, people buy it not because of any of those aspects. I know some people do buy it because of the quality, but most people buy it because they want to show other people that they have it. And I'm like, this to me is completely illogical and stupid, and I don't think this way. So maybe that's my problem. That's why I don't see it. Now, does Ethereum, if Ethereum was a stock, he says, he would compare it to these. Now, these two products, they're not in the growth phase. Home Depot and Louis Vuitton is not a growth stock. I'm not sure if they're pumping out dividends. I should probably check it. But, maybe the earnings of Home Depot and Louis Vuitton are higher than that of ETH. And Louis Vuitton and Home Depot don't have smart contract risk or regulatory risk and stuff like this. So I can see why it's the truth, but I'm completely with Rect here in that, to me, ETH, I'd much rather hold ETH than Home Depot stock or Louis Vuitton stock, definitely. Because to me, like, ETH can be used for so many things. And, I've gotten into it many times in the past, but to quickly reiterate, like, you can trade ETH permissionlessly. It has the most liquidity of all assets in the world. The most permissionless liquidity of any asset in the world. On-chain permissionless liquidity. Now, of course, there's more market cap of BTC, but you have to trade it on a centralized exchange or through OTC, right? But ETH, you can just trade with liquidity pools. Second thing is it has the most ability for permissionless CDP. So you can borrow assets versus ETH very simply. But like if you hold like $10,000 worth of Louis Vuitton, do you know how to borrow versus it? Probably not, right? Anyhow, so those are some key things to take into account. Let's moving on. So here I have Woz Crypto. And he's talking about, he just happens to be the first one who came into my feed to talk about Nikita, okay? And Nikita is, the head of development for like X right now. And if you go anywhere on Twitter right now, you will see tons of hate versus Nikita because of the things he said recently. Let's hear what he says here. Woz says, if I follow 900 crypto-related accounts, I want my For You post or feed, For You, right? Post to show me crypto niche content, not Grok putting a bikini on Donald Trump and a person getting blown to smithereens in Iran. So what he's saying is like Nikita's was saying that they're trying to, kill the bubbles, they're like crypto Twitter bubble. We're trying to reduce these bubbles and make it more like a general news feed. But that's not what Watts wants. Watts wants, I follow crypto people. I want crypto information, right? And and to me, it doesn't make sense. Like, how can you destroy a bubble by isolating it? You need to share it. You need to put it out there more. So Nikita's saying we're going to share it less with general people. So on the general feed, you're going to get less crypto Twitter stuff because they're trying to quote unquote kill the bubble. And I disagree with this completely. Like, if you want to kill the bubble, then you just use engagement. That's it. There should be no detecting what kind of content this is. It should just be purely, how much engagement it gets and so forth. Now, another thing he said that kind of, let's stop for there and we'll bump into it. You can kind of check out Nikita. And so, the other thing that was said was that there's like a conflict of interest. Like, he's head of product at X, but he's also an advisor to Solana. And I tweeted the other day, I replied to something and I said, well, I guess that's why I saw Mert tweets every day last year. Like, that's obvious. Like, how can he I guess people say it's a conflict of interest. I kind of think yes, and I kind of think no. Like, of course he's going to be an advisor to other things, but is he, I would like to know, is he preferring, giving preferential treatment to Solana over Ethereum or other cryptocurrencies? Is that happening? Is there any kind of, if he's an advisor to Solana, that means he has Solana tokens, which is I can see a conflict of interest. But let's not dwell too much on it, and let's keep moving on. We've got a lot to go. Okay, so Nikita Beer. Now, this is a tweet that he put out, and he says, X is the best source of financial news, and hundreds of billions of dollars are deployed based on things read here. We are building smart cash tags that allow you to specify the exact asset or smart contract with a poster of a ticker. From the timeline, users will be able to tap them and see the real-time price along with mentions of that asset. So I think this is already kind of the case. Like if you put like $ BTC and you click it, you won't see price. It won't lead you to the price chart, but it will lead you to like information or like mentions of it, right? Now, the second thing that scares me about this is like the whole Solana and meme coin niche, where it's like you click on, some meme coin and get the chart right away and all the mentions, and like he puts buy #B and you see BTC, BRKB, bonk, and base. Now, base doesn't even have a token yet, so I don't know how that works. But anyhow, I guess that's a mention of base. So anyhow, they're trying, I guess, so it's kind of like I'm getting mixed messages here. Like, are they gonna like isolate crypto Twitter? Now, like, again, the first one is Berkshire, right? So Hathaway, right? So the first one's a stock. So maybe that's, but the second one's BTC. So I don't know. So we'll see. Like, X has been talking a long time about, turning it more into a financial app as well as a social app. So this is maybe the first step towards that. Okay. Moving on, we have KMATS. KMAT says USDT is a toxic asset. Long live the decentralized stablecoins. Now, I understand why he's saying this, because like Tether, is all so basically Tether froze 182 million USDT on Tron across 5 wallets, one of the largest blacklists I can remember. So like if you go to these, they've froze all these assets on Tron. I don't expect to know why they do it, but as far as I'm concerned, as far as my memory serves me, they've been very good at freezing exploited assets, whereas USDC has not. And then what he's talking about is he tags some decentralized stablecoins, which generally, as far as I can remember, haven't froze any of them. However, the assets that he does tag, I believe in to some extent. Like he's tagging FX, which is Protocol FX, CRV USDC Curves stablecoin, Liquidity is Bold, Asymmetry Finances USD AF, Aave is Go, and Resupplies REUSD. I agree with I'm a big fan of these decentralized stablecoins, and I think that they are fantastic. However, right now they are depending a lot on the centralized stablecoins for peg maintenance and value assignment, right? So like most of these stablecoins are paired with USDC or USDT or both in a curved pool or a Uniswap pool. So they're still kind of depending on them, but at the same time, like you can buy Bold and you can redeem Bold for the assets underneath if there's a redemption process, or if redemptions are currently open because of the peg, the price, right? So I'm a big fan of decentralized stablecoins, but I also see the value of decentralized stablecoins in the space, and I hold both, right? And I think both are kind of important for our system. Like there are people in the ecosystem who or yet to enter the ecosystem that will only enter via USDT or USDC. So we need to keep them, but at the same time, we need to share these other options for people where like I don't know about these other ones, but Liquidity Protocol Bold is completely immutable, unstoppable. There's nothing. anyone anywhere could ever do, unless they shut down Ethereum, right? Somehow, to stop Bold from being Bold and being a stable coin the way it is. So check it out. Check these guys out, and moving on. Okay, so Vitalik tweeted. He commented on a post that was from a person I blocked. So I'll open it up. It's Gabriel Saprio. Now I'm not sure why I blocked him. I think he was shilling something a little while ago, and I blocked him. So. Vitalik retweets, to talk. He says we need better decentralized stablecoins. In my opinion, 3 problems. Ideally, figure out an index to track that's better than the USD price. Now, I'm not sure. People want USD stablecoins. They've tried Euro stablecoins, and some, there are Euro stablecoins to some that are what we would call successful and utilized. What else would we do? Other fiat currencies? I'm assuming he's saying, like, let's not use any fiat currency and let's use some sort of index. Maybe, there's Frax did that. What was it called? The price of the products. I can't remember what it's called. It's at the tip of my tongue again. So Frax has this stable coin that was like pegged to inflationary like US dollars, basically, like the price of buying items. So I wish I could remember what it was called, and it'll come to me later as well. But yeah, so so that's there. So he says Oracle design that's decentralized and not captured by a large pool of money. So I agree with this. Oracles are a little bit difficult, but again, like Uniswap TWAP is an oracle. It's not foolproof, and it's not usually used as a primary or sole oracle. However, it does protect against a capturable oracle such as I don't even think Chainlink is capturable at this point. Like it's pretty decentralized with its own validator set and so forth. But anyways, so solve the problem that staking yield is competition. I'm not sure what this means. Solve the problem that staking yield is competition. Now, it's a pretty long post, and he does talk a lot. If you don't have so you can check it out. I don't really know what that last one means, and I'll have to think on it for a little bit. But you can check out Vitalik's tweet here about this and so forth. So moving on, we have a DeFi investor. He says, what I'm looking for in a tokenless dApps. So he's talking about airdrop farming. And so these are the thing he thinks are important. A strong community, good revenue metrics, truly innovative product, humble team that has demonstrated that they have a community-first approach. The word community to me gets thrown around a lot, and it's very fluffed up. Like you'll have just a spam fest of good morning. Is that equal community? Does that even matter? I don't think so. I don't really think community is as important as to be the number one factor here. I think TVL and revenue metrics are more important than community if you are looking to get a farm an airdrop, because what you want from an airdrop from an app an app that's potentially going to do an airdrop is you want that app to be producing a shit ton of revenue. You want a whole bunch of money going into the treasury so that they can put that money with the token in a liquidity pool and have a deep liquidity pool so that you can sell your airdrop. Like that's pretty much the key thing we want here. However, in my opinion, I don't think the airdrop is needed at all. Like, why not just produce the product? If the product truly is innovative and has the potential to produce good revenue, why not send that revenue immediately to the token and immediately start farming the token? Like you can change the inflation rate to as growth goes. As the product grows, inflation rate might grow so that you don't give out shit tons of tokens to 3 guys at the start. So I'm not a big. I don't think airdrops are the answer to the token problems that we have. Of course, I like getting an airdrop, and of course, I want them. But I think airdrops are mostly designed so teams can build, deploy, farm assets, farm like I said, let's say farm $2 million, and then put $1 million into the liquidity pool. Does that sound fair? No. Why not just turn it on right away and let you farm right away? No need for an airdrop. Just use the product. If you use the product, you get tokens, and then maybe after the treasury builds up some fees, they can monetize that token. Like, I think it's great. Like what SummerFi is doing, in my opinion, is the best way to do this, I believe. Moving on. So I have Jasper, the friendly ghost.eth. What does he say? Will we ever be able to add local offline transactions to Ethereum? I want to be able to pay in ETH without the internet, subject to some guarantees. I have no idea how this would work, but it would be a huge benefit globally. Now, I like what he says, but can you pay anything without internet now? Like, I guess you can. Like, you can definitely go to like you can still use your card. You know, you can still use your Visa card to pay at some store, but that store has internet, right? So would I be able to do that? I guess you can already do that with crypto Visa cards. However, maybe he's talking about something that's not centralized like a crypto Visa card, maybe some sort of Ethereum card where you could use Ethereum or stablecoins or something on Ethereum, and you would pay with the card, and then it would just like have permission to take that asset out of your wallet. Sounds a little scary if when I word it like that, but yeah. So I think he's onto something. That's a clever thought experiment and worthy of talk. So I got to speed up a little bit. I got about 2 minutes and maybe 5 more tweets to go. So Naroff, Nairolf, Naroff says, what is the real reason crypto Twitter hasn't moved to an alternative to Twitter? We already have identity protocols, reputation primitives, native payments, decentralized data. So what's I missing? Farcaster tried. Why don't I do it? Is because I already have like an audience on Crypto X, and when I try to use Farcaster, I find it to be cumbersome. I have to use my phone. I can't. Maybe I can use a browser now, but I couldn't before. And when I have a large audience here, and I don't have a large audience there, so I think that's what he's missing is the starting over factor, which is tough, right? But I do see what he's saying because he's probably talking a little bit about Nikita's hate right now. So moving on, we have DB Crypto. He says, well, that didn't take long. So this is kind of funny. So if you click in here, so the Wolf of All Streets says, I'm launching a news network to replace the mainstream financial media. Ask me anything. And then DB Crypto says, please make sure you verify claims and info before regurgitating garbage like most do. Yes, it's a race to break news, but that is also what has destroyed the space. Don't play the same games. And then his next picture is the Wolf of All Street. Update X to integrate Solana. X to launch smart cash tags for accurate asset. And then he says that didn't take long. So I kind of agree with him. Like, come on, dude. Like, do you think X is actually going to integrate Solana? Or are you just shilling your bags? I don't know. Like, maybe if X integrates all of crypto Twitter, Solana will be included, right? But I don't think it's like he's making it look like a partnership. So yeah, I you can't trust anybody who says anything on this space. It's just all like, it's terrible. Okay, so here's an awesome video. I don't want to talk too much about it, but we have Chairman Jerome Powell coming out saying that the the government is suing him, and when you listen to him, you feel like this guy's honest. Like he sounds like people hate on him because it's like he doesn't pump their bags, but I think he's one of the one people in the government who doesn't care about politics and isn't playing the like politics games. He's just trying to do his job about turning on and off the Burr machine and trying his best to keep unemployment down and the value of US dollars stable. Now, during that COVID era, the Burr machine went on hardcore, and I believe he believed that it was the best thing to do, and maybe it was the best thing to do. I don't know, but you watch this video of him talking about this, and you'll get a small respect for his what he's saying, and maybe for him and so forth. So you can check it out. Crypto Twitter does revolve a lot about what the Federal Reserve does. If he tampers with interest rates, he has a large effect on the prices of crypto. So everyone follows him and listens to him and waits for his interest rate cuts or increases and so forth. So check that video out. I gotta go a little faster. Okay, so Ceazor has dropped a daily gray. Now I haven't listened to it yet, but he says today's topics: Ethereum principles, ETH Panda Ops 2026, blob count increased, and much more. Watch it on YouTube here. Now, if you don't watch the daily gray, I highly suggest you do it. If you are an Ethereum holder and you care about Ethereum, he doesn't talk, he's not shilling the price, he's not showing you price charts, he's telling you about actual Ethereum news, like actual technical information about the growth of Ethereum and the changes to Ethereum itself, as well as related side news like L2s and all this kind of stuff. So he's definitely worth it. Okay, the last one here I have is, this I found interesting, is from Bancor. It's a public service announcement, USDN on Say. So Say Network, SIP upgrade expected March. Will transition Say to an EVM only chain, removing support for Cosmos native assets like USDC.N. So USDC-N holders should plan to migrate to negative USDC ahead of the upgrade. So that's pretty interesting. Like here is one more chain that's like, you know what, we're just gonna go L2. They have right now, I guess right now they're a quasi L2 Cosmos, or they allowed Cosmos to bridge in USDC, and now they're like, you know, we gotta fix this. We've got these two kinds of USDCs. I've seen this problem in the past, and I actually built a protocol in the past for this exact problem, where there were several assets, several stablecoin versions. So there was like an Axelar version, a layer 0 version, a native version, and I built a protocol for this, but I never deployed it. I never used it because the problem on the chain that I was looking at was solved, or it was going to solve very shortly after I designed the protocol. But this is a problem. Nobody wants to go to a chain and be like, oh, there are 3 USDC here, or 2 USDCs. Which one do I need to use? And then you need liquidity for both of them. You need a liquidity pool that has like USDC and USDC. And it's the same asset in one liquidity pool. In order to people to swap through it, you need to incentivize that pool. You need to pay liquidity providers to provide to that pool. And all it is the problem comes from just 2 bridges. Okay, so anyways, that's it for today. I hope this has been interesting and useful. Again, this is not financial advice. This is my own biased opinion. Take it as you will. And thank you for listening, and goodbye.